thing was much stronger with a human running the show at point of sale, with brokers actually going in. There's Joel, he's a legend. This is the most vibrant room in the world. There were 2 bars up here. Brokers would come off the floor, have a few. They're not interacting. There's no human negotiation. All the negotiating is done algorithmically. So welcome to the New York Stock Exchange. First thing I want to show you guys is the bell before it gets a little crazy. Right now it's slow, 3:07, so we've got another 53 minutes before we close. But in the next half an hour, people that ring the bell from Callan Corp, CP, Callan Petroleum, their group is going to come down here and they're going to congregate over here, just like you guys are about to. All right, so this is our bell podium. So if you get the honor of ringing that bell, you get to come here with your coworkers. You know, you get to pick a total of 14 people from your company to ring the bell. They'll bring out a book. The CEO will sign that book. It's a book of distinguished guests. Now, it's not just CEOs. It's, you know, if it's a charity bell, it's the head of the charity. Or if it's a celebrity, they get to sign it. We've seen a lot of really cool people congregate here. And the thing they tell you about the bell is more people watch the bell on a daily basis than any other event in the world. And if you think about it, which kind of sounds, that's crazy. You know, on Wall Street today, ding, 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 and boom, they're showing people clapping, or, you know, they have to clap even though we're down today, you know, and you guys are, you know, here on the down day, Dow's down 300 points, the S&P is off, I can't read, oh, wow, over 1%, so 1.3, yeah, so the VIX is spiking, so if you're long with VIX, you're happy today, but yeah, so they're going to congregate here, and they still have to clap even though it's a down day, and they'll get blasted throughout. Got more electronic. We didn't need as many people, so we consolidated from over 20 trading posts down to what you see now, which are about 6. So this was a trading post. We said, with the cooperation of CNBC, let's make this a TV set, and you'll be our premier network down here. And so someone can ring the bell and then come right down and tell their story, especially like on an IPO day. Right. You get to ring the bell, you get to be welcome to the New York Stock Exchange, and boom, you're on with Kramer.
So this used to be like a pit, right? So back in the day, when, you know, I guess you had to run around with tickets in your hand and everything like that. Pit. And then
well, there was no pit. This was it. This hasn't changed. It was this flat surface. There were trading pits in options markets, but here at the New York Stock Exchange, every stock has its own home. So if you wanted to trade, and today the one everyone's, you asked about the lunch orders. I was an expert at lunch orders. Everyone was at one point in their career. Lunch was the most important thing.
Absolutely.
And my training, first 6 months on this job, 1992, right out of college, 5,000 people on this floor. And no one went out for breaks, because if you snooze, you lose. You may miss a big trade.
The crowd was bigger. And
they had runners, and we were doing clerical work. And one of the things we had to do was lunch every day. And my training was go get lunch for these 10 people and these, you know, these 10 different personalities with 10 different orders, and get it right. And don't complain. Because if you complain, they don't want to hear about it. Because how are you ever going to handle 10 different brokers and 10 different stocks with 10 different personalities if you can't handle a lunch?
Was it up to you to choose their lunches?
Oh no, they were always special.
They knew their stuff, and you better remember it, because
they would only tell me once, then you have to remember, because people usually ate the same thing, except on like Fridays we go chairs, and I would run to them and say, hey, I have a problem with this stock or this system. They monitor all the news channels. On the other side of this room is called the garage. The garage was also a place where we traded stocks. It was the second room that opened. So you're in the main room. Check out the ceilings. I don't know if you've even looked up yet. This building was built in 1903. It was the 3rd version of the New York Stock Exchange. First, actually 4th, because the first was under a tree outside on Wall Street, the Buttonwood tree. Hence the Buttonwood Agreement that was signed by 24 traders in 1792. They eventually moved inside. 1 building, 2 buildings. This is the 3rd from 1903, and this is, you know, was a masterpiece. I'll explain some of the scaffolding you see in here later. This is also part of the fabric of the floor. But this monstrosity that holds up the trading post, because they're actually elevated, was bought in 1979. But the garage opened in the 1920s. Why the 1920s? Well, there were more companies coming public because there's the Roaring 20s. You needed, and then we started losing people. So let's, yeah.
During the pandemic, you guys built something new, or when the market was closed?
Well, the pandemic, we had a lot of procedures in place, but we shut down for 10 weeks. So March 20th of 2020, COVID was running crazy in New York. In fact, it was big on the floor, unfortunately, and we had to shut down. We went electronic for 10 weeks, and a lot of people here thought that was the end of the floor. If you're going electronic, how do we do these things? But we realized, and the New York Stock Exchange got a free look at what electronic market making would look like without a human element involved. And the statistics showed the market quality of the stocks that trade here in this building was much stronger with the human running the show at point of sale, with brokers actually going in and getting real price discovery instead of doing it electronically at home. So it was, it could have been the death nail for the exchange, but it just proved that having a human oversight, human judgment, was much more valuable than machines alone. So, but it has changed since COVID in that, there aren't as many people that have come back. A lot of people, especially on the upstairs desk, work remote at times. The people down here, they're here every day, and there's no remote work anymore. And I like it that way. So, yeah. So this is CNBC little studio. Sometimes Bob Pisani will report in there. Mike Santoli works in here.
They show the charts?
Yeah, they show some charts and look at the regional banks. That's not good. We can't look under here, but if you were to, that's where Kramer's buttons are for his show Mad Money.
Oh, right here.
So this is the buy, sell. Yep. And then we have some of the friendliest brokers in here. There's Joel. He's a legend. All right, we're just going to walk. Our morning meetings, and you get lung cancer walking into that room because everyone smoked. It was crazy. They'd read their journal. You talk about what you wanted to trade during the day. You talk about sports. But it was the most vibrant room in the world. There were 2 bars up here. Brokers would come off the floor, have a few cocktails. That's how I got to learn to trade, because I worked for an old timer who would have a martini lunch. But now what we do is event space for our listed companies, and we have right here our founding document. So this is our Constitution, our Declaration of Independence, if you will. It's a Buttonwood Agreement. So the Buttonwood Agreement was signed by 24 brokers out under a buttonwood tree, which is really a sycamore. They called it Buttonwood because the wood was used to make buttons from the bark. And it was very simple in principle. It's not a long document. It basically said 2 things. We are going to be the 24 people that trade on behalf of the public. And what did they trade? They didn't trade stocks in 1792. They traded commodities. They traded sugar, wheat, corn, tobacco. And then eventually companies went public. The first company to go public was Bank of New York, founded by Alexander Hamilton. And these 24 brokers signed this agreement, and the other part of the other stipulation, you trade with us and you trade for a flat commission fee. And that flat commission fee lasted until till the late 70s, early 80s, when the first discount broker was formed. And Muriel Siebert, who was the first female broker on the floor, she left, created her own firm, and created a discount brokerage. So she basically took scissors to this agreement because it wasn't a flat fee anymore. She had a discount brokerage and changed the industry forever.
Okay.
But it's here, this is nice. Yeah, and this was glassed in, and visitors would come and they would look down and they would see all of us just running around. It was a much different time. So now this is a little sad for me because you can see the entire floor. You don't see too many people. The people that you do see, they're staring at a computer screen. They're not interacting. There's no human negotiation. All the negotiating is done algorithmically. So they're monitoring things closely, but the market makers do talk to their companies, and this is an important factor that differentiates this exchange from any electronic exchange.
Yeah.
if you take a company public, you're going to choose to come to New York Stock Exchange. You're going to ring that bell,
Yep.
and then you're going to go down to the floor where your stock trades, and meet your human market maker that you chose, and you're going to see the buildup of the book, the buy side, the sell side, where supply and demand meet, and once that bell rings, you start trading, and now it's the market maker who reports back to the company, and it's usually not the CEO, usually it's always investor relations, sometimes the CFO, and tell them what happened to my stock today. What they want to know is sizable buyers, sizable sellers. We don't know who's buying it. We know the institutions behind the order flow. So if it's Goldman Sachs, the IR team could do research. Warren Buffett uses Goldman Sachs. Oh, maybe Warren Buffett's buying our stock. Maybe, this pension fund is selling our stock because they are the largest shareholder, and we see their numbers are dwindling, and this is who they're using. So